o'clock. This is a meeting of the Retirement Committee of the Brazos River Authority. We call the meeting to order. I'd like to call the meeting to order at 10 a.m. As a courtesy, if you're not speaking, please mute your audio so there are no interruptions or background noise. The public notice for this meeting was properly posted as required by law, and the notice was provided to each director. Directors for the attendance record, when your name is called, please unmute yourself and let us know you are here. Lisa, please call on each committee member to record the attendance.
Chairman Luton.
Here.
Director Taylor.
Yes.
Director Henderson.
Present.
Director Leslie.
Here.
Director Tallis.
Here.
Presiding Officer Flores.
Here, good morning.
Good morning.
Is that the crop? We have no public comments signed up for, so we will proceed to the agenda. Item 1 on the agenda is report and possible discussion on pension advisor report by Andco Consulting LLC, presented by Tony Kay and David Thompson, Chief Financial Officer. David?
Okay, give me a second to put the slide up here. Can you see slides?
Yes, sir.
All righty, well, I'm going to turn it over to Tony, but before I do that, I want to say we've got some good news on our performance goal. One of our first goals we have achieved, which is the first I've seen since we've been here. So Tony's doing some great stuff. So what I'll do is turn it over to Tony and let him go through his executive summary. Tony?
Well, great. Well, thanks, David. Appreciate the introduction and good morning to you all. Hope everybody's doing well. And as David mentioned, good news to share today regarding the investment results of the portfolio. Certainly when you consider, all of the volatility that we in the markets have been forced to endure, given the global pandemic, the fact that the portfolio has not only remained resilient in the face of those headwinds, but also been able to capture more recently the positives in the market. We're very happy with that. So with that, David, if you'll go into the first page of the report, the portfolio walkthrough, you can see where we began the quarter, just shy of $20 million in total asset values. Contributions that came in towards the end of the quarter, totaling $1.4 million. You can see $600,000 in pension payments over the course of the 3 months ended September 30th. Negligible fees and expenses for the quarter. Income at just around $100,000, but importantly there at the bottom, asset appreciation in the 1 quarter alone at $1 million. So good participation, in the up market that we had this quarter. We had a similar story for the June 30 quarter. So it's really been 2 good quarters in a row that have helped us to recover from the very challenging first calendar quarter of the year. Took a look at the portfolio through Friday's close as markets have continued to rally higher. Some optimism, related to potential vaccines and improving outlook for treatment have, moved the S&P 500 as we sit today to an all-time high, where we do have a lot of the equity assets. So through through Friday's close, total market value of the portfolio was at $22.7 million. So up just a little bit over 4% since the writing of this report. So hopefully that continues through the remainder of the year. And when we're talking about 12/31 results, we'll have even improved figures from today's reports. David, if you'll move to the next page. And this gets into the positive information that David was sharing before. So starting on the quarter, 6.1% rate of return versus the benchmark's return of 4.9%. So again, the equity allocation, the deployment of the investment managers, all helping us achieve a nice quarterly return. Fiscal year to date, you can see there up 6.8%, outperforming the benchmark. And then you can see the various figures as you kind of scroll to the right. As David mentioned, though, that 5-year number, which is one of the numbers that we track as one of our goals versus the actuarial assumed rate of 6.5%, nice achievement versus that. And again, that's net of investment management fees. So outperforming by about 100 basis points or 1%. And, you know, as we kind of peel the onion back a little bit and look at what led to that, I think there were a variety of factors. So we've made some enhancements to the portfolio over the last couple of years. We've introduced index investing, so low cost S&P 500 index fund, which has performed very well. We've also eliminated some positions of the portfolio where we were patient but just weren't being rewarded in terms of return. Specifically the MLP allocation, Master Limited Partnerships, so energy infrastructure. We did that in June of 2019, and I think that was pretty timely given what's gone on in global markets and the downward pricing pressure that we've seen on energy-related assets. So all of those moves, I think, working in conjunction to deliver some good results. You can see some of the other bullet points as well that have led to the recent improvement in return. David, will you move forward one page, please? So getting to those comments on our two goals here, right? The first one we talked about, outperform the actuarial assumed rate of return of 6.5% net of fees. We did that with that return of 7.5%. But I did put two bullet points in here because, you know, there's been some volatility around this number. And really, when you're talking about 5 years of returns, you know, dropping off one quarterly return and adding a good quarter like we just had can really move to some really result in some fluctuations in the numbers. So when we were looking at this report last quarter, 5-year return was 4.5%. So we dropped off a challenging quarterly return, added a good quarterly return, and you can see, you know, just how fast these numbers can move. So it's important to watch this over time and to be aware of how the portfolio is performing. But I want to, you know, set the stage that there will be some volatility around these numbers. We're certainly happy with where we are right now. But if we see, you know, some kind of dip or sell off in the near term future and we drop a little bit below that, you know, I think we're comfortable knowing that long term we expect the portfolio to perform, you know, well enough to beat that that benchmark or that return goal. Goal number 2, we did not achieve, but we've been making good strides to it, and that is to be in the top 50th percentile compared to other public pension plans. So we've seen that peer universe rank slowly creep up. This quarter, we ranked in the 11th percentile, so outperformed 89% of other public pension plans in the universe. Again, not just our clients, but public pension plans across the country. So I think that's a good figure. And then if you take a step back and recall where we were in 2019, the portfolio ranked in the 3rd percentile of the public pension plan peer universe. So outperforming 97% of other public pension plans. So again, that goes to the changes I think we've made over the last couple of years, and you're really starting to see that pay dividends. So my anticipation is, you know, a few more quarters like we've had here. My expectation would be that we'll start to see this goal number 2, us achieve that as well. David, if you would, one more page forward. Asset allocation. So in line with our investment policy statement and our strategic targets, you'll see a slight overweight to fixed income there at the end of the quarter. And really that goes to the contribution which was made late in the quarter. Subsequent to the writing of this report, we did allocate some more to some of the underweight areas of the portfolio, predominantly within equities, a little bit in real estate as well. But this is something that we, along with staff, track on a regular and ongoing basis. And one of the ways that we've been able to reduce risk in the portfolio and capture gains is on a monthly basis when we've had distribution needs. So when we're making pension benefit payments, we've been taking away from overweight asset classes. And recently that's been equity. So as the market has risen higher and higher, we've been able to sell into that strength, take some profits off the table, take some risk off the table, and keep the portfolio really nicely balanced. So I think that's been a good process and a method that we've had in place for a few years now, and it's really been to the benefit of the portfolio's returns. So the last comments that I will make on the executive summary on page 6. We always track the fees, and I think this is another area where we've spent some time and made some enhancements to the portfolio to drive the fees down. Obviously at the end of the day, we're tracking net of fees performance for the total portfolio. So the lower your fees are to begin with, the more advantage you have. So you can see the all-in fees on the bottom row there, investment management fees of less than 0.5% at 0.46%. On about $22 million of assets, so that equates to approximately $100,000 in investment management fees. If you go back up, look at the domestic equity segment and the fourth row down there, Vanguard 500 Index. That's one of the most significant changes that we made. We eliminated a large cap active manager that was charging closer to 1% in fees and replaced that with Vanguard at 0.05%. Again, the lion's share of the assets there with $6 million, and you're getting that for about $3,000 in fees a year. So a very efficient way to access equity returns, and again, that's been beneficial. I took a look at a report prior to this change being made a couple of years ago and looked at the fees on an annual basis, and at the time, instead of that 0.46% fee on the total plan, the portfolio's fees were right at 0.80%, so just a little bit less than 1%, which equates to annual fees of about $170,000 to $180,000 a year. So that fee savings on an ongoing basis, $70,000 to $80,000 a year, that's real money. That's pension checks. If it's not pension checks, it's corpus retained by the plan that can be reinvested and hopefully gain that 6.5% rate of return, if not better, over the long term. So very pleased with those changes, and we'll continue to monitor this. And if there are opportunities to lower fees in the future, we certainly will bring that to the committee's attention. So with that, those are the prepared remarks I have. Sorry if I went through that quickly, but absolutely want to take any questions. Happy to dive into any of the results or managers closer as you wish.
This is the best I've ever seen it since I've been on this committee. I appreciate what you've done and congratulate you.
Well, thank you. It's certainly been a team effort, and I appreciate the committee and the staff willing to hear out some new ideas and work with us. So commend you all for your diligence and hard work to get this portfolio to where it is right now. So thank you. It's our pleasure.
Tony, this is Cynthia Flores. I want to echo John Luton's comment. This is the best that we've seen it. Both Director Luton and I have been on the board since 2015, end of 15, I believe. But I appreciate your explanation, and I truly feel like you're working for the BRA and you're working with David to make sure that we are doing the best that we can with our portfolio. So thank you very much.
Thank you. Appreciate that.
Were there any other questions? I guess we can move on to the next one then, John.
All right. The next item on our agenda is a report and possible discussion on the minimum education training MET program presented by David Thompson, Chief Financial Officer.
Second. Okay, can you see the slide there?
Yes.
All right. Wanted to bring to everybody attention, start looking at getting these hours in. Pension Review Board, we make reportings in February, and then we also make reportings in late September or October. This is a requirement of the trustees to be in compliance with the training hours. And here's the hours that, and the dates, everything is ending up somewhere around the end of September or in January of 2021. Currently, myself and Director Luton have met and are in compliance. I do need to stress that the other folks need to get their hours in. We're not in compliance by those dates, and we do a report in February. The non-compliance does go to the legislators and to the governor's office that we weren't in compliance on training. So this is a very critical thing to have in place. Here's basically the rules that come from the Pension Review Board. If you're in your first year, which are two of our trustees, you have to have 7 hours, and then those that have been around, had gotten their first hours, you have to have a minimum of 4 hours every 2 years. The textbooks have been giving courses every once in a while. It's difficult to catch up with them because sometimes they come in and I can't figure out what courses they have, but they're trying to get more online courses. So, but the best bet for your dollar here is that the online training, you get your 7 hours, or you can get your 4 hours. You can even repeat the 4 hours that you had from last time that you did it in the same course. And this is how you get into the system. And once you get to the point that you finish the course and print the certificate, you need to get those back to me so that I report them. But we need to really stress, I know with the holidays coming up and everything going on, you need to get on a regular basis to get these courses done. We have not had any problem not moving compliant for the last 4 years, and I want to say that way if we can.
David, this is Ford.
Yes, sir.
The online, I've looked at it and I'll take care of getting that done, but those are only the core courses, and since mine's a renewal, I can have core or non-core. Is there a non-core classes offered online or just the core classes?
The core classes are the Pension Review Board. The non-core classes are the ones that pop up every once in a while from TextPerk. And I got a notice today but I can't figure out how many hours it is, but there are courses that pop up every once in a while. And I thought I put everybody's email addresses to TextPerk. Are you getting the emails from them?
I probably have blocked it because they were irritating me.
Okay.
But I will. You've answered my question. I will just go do the core courses before my deadline.
All right, that's good. But I mean, I think back on October 31st, there was a 4-hour course offered by TextPerk, and but they do pop every once in a while, and sometimes I catch it like you, and sometimes I miss them.
Okay, I'll take care of it for you though. No problem.
All right.
Hey, David, this is Tony.
Yes.
Do you mind if I add something, because I have several other clients that have run into these issues with it all going to online. the Texpers.org. If you go to their website, there's a banner in the middle of their page that's online education, and it's those non-core classes. And I've had several clients that have taken those, and you just register in advance, sit for the whole presentation. There's no test or anything at the end of it, but they give you a code that proves that you attended that, and you enter that in at the end, and then you get the hours that way too. It looks like the next one is December 1st. And they have a variety of different educational topics they're covering. So
Yeah.
like checking out.
Yeah, I saw the one for December 1st just popped up. So, but it didn't say how many hours it is. So, but I'll send that up to everybody for the December 1st one. That's non-core courses.
Yes, David,
Yes, sir.
this is Royce Leslie. I have those things. It's showing there that I don't have any of them, but I have all of them except the last one. Do I just need to send that to you? What do I do with that?
You need to send them to me, please, sir. And then I will go ahead, put them out and report them to the PRE.
Okay, I still like one more. I was just going to send them all at one time, but do you want them as we get them, or?
You can do it either way you want to. You can send to me as you do them or all at one time.
I'll try to get that one this week or sometime, and then I'll just send them all to you.
Perfect. That's perfect. Perfect.
Uh,
And you're taking the core courses, right?
I've taken the 7 core courses.
Perfect. 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 God.
I like one of them, but I'll give you. But thank you.
All right. Any other questions?
We need to get this done, folks. It's important.
Yeah, we don't have anybody not in compliant by January 25th. All righty. I will move on to the last group.
The report and possible discussion on Wells Fargo report presented by David Thompson, Chief Financial Officer.
Hang on a second. Are you seeing the Brazos committee meeting November 16th?
Yes, sir.
Oh, good. All right. It didn't pop up the way it usually does. Barry McDonald's, who's our administrator from Wells Fargo, could not attend, but I can walk through these numbers with you. And are you seeing the defined benefit pension plan, payment information and numbers?
Yes, sir.
150 are participants that we're paying. That leaves 182 that have not started participating in the plan yet. Now, remember, this report is as of August 31st. So as you're looking at the numbers here, they're different than what Tony was presenting. And on September 1st of 2020, we did make a contribution of 1.4 million that was approved by the board in July budget. So Tony's numbers reflect it, but this report does not. I do want to say that our expenses are running around 80,000, and that's pretty consistent from year to year. And that's pretty much it. So we've got a good numbers here. Hopefully, knock on wood, it stays constant and we continue to grow. Any questions from any folks?
Does anybody have anything they want to ask or say? If not, I'll entertain a motion to adjourn at this time.
I move that we adjourn.
Identify yourself.
I'll second it.
Second.
Who moved?
Director Henderson.
And seconded by. Did Royce second?
Yes.
Correct.
Let's forward either one.
All in favor, say aye.
Aye.
We are adjourned at 10:25 a.m.
Thank you all.
Thank y'all.
You guys.
Your support.
Have a good week, everybody.